Does a slowing China help or hurt our trade talks? The Brandywine Global Portfolio Manager Jack McIntyre and Mercatus Center Senior Research Fellow Veronique de Rugy. Forgive me, Veronique. Let me start with you. What do you think about how China's slowdown might affect our trade talks, if at all?
Well, I think it could affect it, if only because there are really serious tension, not just because of the trade war with the United States and China. I mean, the economy has slowed down in quite a while. I was looking at growth number this morning, and they really haven't been in the two-digit growth number in quite a while. And so there's a lot of pressure on the president to get the economy going. The trade war is not helping, and we shouldn't be surprised, obviously, as Americans, right? Industrial policy doesn't work in the U.S. and it doesn't work in China. Exactly. And so all these tariffs are hurting. I mean, our tariffs are hurting our consumers. Their tariffs are hurting their consumers. And so the pressure is mounting for sure.
Well, and they also, Jack, have this new foreign investment law. Mm-hmm. It's meant to encourage investment in China from foreigners. It supposedly gives foreigners a lot more freedom than they've had in the past. Will they deliver on this, or is it just another empty promise?
Well, I think normally you have to wait to see what their actions are, but I actually think that they will deliver. I think this is a little bit different environment, what we've seen. And clearly, as you pointed out, China is slowing. They can't afford to have this trade tension drag out too much further. So I think they're willing to bring some things to the table. So, but again, I don't want your viewers to say, hey, you know, we're off to the roses. I remember this is a new economic Cold War between the U.S. and China. It's just, hey, we've got this battle that I think is going to have a decent outcome, and both are going to reach an agreement.
And Veronique, this new foreign investment law, among other things, it does allow foreigners to open a business without Chinese partners necessarily, or at least a vast diminishment of the number of Chinese partners you have to have. Do you think that it's for real, or is this, again, another Potemkin village that they're putting up that doesn't have any real backing?
It's hard to say, but I actually suspect, you know, that Jack, that it's probably real. And let's not remember, as great as it is for foreign investors in China, it's even better for the Chinese. The Chinese will not succeed because of their industrial policies. They will succeed when they put in place strong free market policies. And unfortunately, under President Xi, we've seen a retract. I mean, he has scaled back away from those reforms. And hopefully, all the tensions plus the results of his bad policy is going to give him a strong incentive to open up a little bit, and that could be a first step.
Jack, I think Veronique brings up a great point that the Chinese are natural entrepreneurs. I mean, despite all of this, the bad stuff that the communist government does in terms of stealing our property, intellectual property, and trying to invade foreign companies with Communist Party officials, there is this natural entrepreneurship in China that it doesn't take much to light that fire, just one match. And they are part of their policies now include tax cuts, significant tax cuts, regulatory cuts. It actually sounds a little Trumpian.
It sounds supply-side economics, and I agree. And remember that the Chinese economy is transforming even before our eyes. Consumption, services are becoming an increasingly bigger driver of growth. The private sector is getting, as you pointed out, a little sort of fire in their bellies, animal spirits. So long-term, I think you can kind of still paint a pretty constructive outlook on China. And I think it's important. The U.S. needs a stronger China. The U.S. needs a global economy that's doing well. We're not an economic island. If the rest of the world's slowing down, the U.S. is going to slow down. So we need some progress on the trade tensions.
But just sticking, Veronique, with this new policy, as I said, a Trumpian policy, it's too much to call it Trumpian, but they are going to lower taxes and lower regulations. But on the other hand, as you mentioned before, Xi wants to be president for life. Xi is a full-fledged Communist Party member. I mean, have no illusions about it. If you give up more economic freedom, doesn't he endanger his personal goal of a totalitarian control of the country?
Well, I think actually he endangers it if he doesn't, because the Chinese have actually gotten a taste of what it is to be able to trade, what it is to be able to grow, what it is to be able to get richer, what it is to be able to serve your family and dream of a brighter future. And if the economy is slowing down as it is, and it has been, and it's going to slow down further, I mean, it's going to create serious, as it is already actually creating serious tension. There's actually a lot of criticism coming from within China about the stealing of IP, about the bad industrial policy of directing loans to cronies. I mean, there's a lot of things. I think President Xi is in a bad place where he just he doesn't have a choice. I mean, I think it's a great place for those who believe in market, because I just don't see how he maintains it without opening up.
Jack, very, very quick final point on the Trump administration's view about China. It seems that at first they were quite happy with China going down the tubes, economically speaking, because China was seen as a threat, and it still is. It's clearly a military, cyber threat, et cetera. Sure. But on the other hand, they saw how the world economy was affected and how our own stock market is affected when China does badly. So has that view changed somewhat from the Trump administration?
I think it's changed from the Trump administration. It's changed from the Fed. I mean, the realization, as I pointed out earlier, the U.S. is not this economic island. Historically, when the rest of the world slows down, the U.S. inevitably slows down. So we need a China doing well. Think of the adage that, the U.S. and China are the elephants. When they fight, the mice get squashed. The mice is the rest of the world. We need the U.S. and China to step up, reach an agreement. I think they will, just in the context of, as you point out, this is an economic Cold War, as well as probably a real Cold War.
Jack and Veronique, good to see you both. Thank you very much for coming in. Appreciate it.